What's going on, everyone? We're going to take a technical analysis look on Apple, ticker symbol AAPL. Happy Wednesday. Today is the 5th of October. Again, sorry I've been away for a little bit. We've been dealing with a loss in my family, so I've been trying to just spend as much time, with family members and kind of grieve with everyone and take it all in. But what we are going to do here is look at the at the chart, daily chart of Apple. So on Apple, again, if you just watched my SPY video, you'll notice that I kind of talked about a little bit of a distribution cycle. We could be entering into a bit of a consolidation cycle. Normally distribution is going to last anywhere from 2, 3, or 4 days. And what that exactly means is we want to give enough time for demand to sort of catch up to supply, and we need to see, price action kind of confirm that supply going higher before we get any bigger moves. Ranges could be contracted, so what that means is you don't want to go on max size on every single scalp in day trade. You kind of want to wait for the bigger levels to confirm, and you want to be a little bit more patient and allow things to set up. Last thing you want to do is get into some call positions and have to quickly be stopped out, only to see 3 or 4 days later you would have been right on your prediction. So what I'm looking at here is this 5-day moving average. This is going to be a very, very clear line in the sand for me. That price on Apple is going to be 143. This is going to be a macro trade to the downside. If you just kind of notice, September the 30th as well as October the 3rd, these two top wicks here correlates perfectly with the 5-day moving average and also today's low. So anything below 143 is a short position on Apple. I would look to take put options to the downside, take my profits as I see fit. Now what we are doing right now is starting to challenge yesterday's highs. That's also going to be the body close of September the 29th. Okay, now just be careful because the top of the range is coming up here on the 10-day moving average, and that price is sitting at around $147. So if you are currently holding call positions, or you're currently holding common shares and you were just looking for a quick move, it would be between now and 147 is where I'm going to want to start locking in some profits. Now that doesn't mean that the long trade is over. We can reattempt a new long trade once we start to confirm the 10-day moving average. Over 147 I would be looking for on a daily candles close. And then the next day, what I would be looking for is a confirmation of that high price. As soon as price action confirms the previous day's high over the 10-day moving average, that's when I'm going to want to get long. And my next price target on Apple is going to be $150. Now, that does not mean that I'm going to wait all the way to 150 before I lock in profits. Obviously, depending on your position sizing, everyone account size is a little bit different. But for example, something on Apple, I might take 10 to 15 contracts, and I'm going to scale out in increments of 2-3 contracts at a time as we climb higher. Now, getting back to the range bound trading that I think could happen for this week at least, right? The week of the 5th of October. The closer we get to 146.5 and 147, I could see a little bit of a pullback, but still over this 143. Now, if you're looking to short-term trade and looking to play the rejection, what you would want to see is a tag of the 10-day moving average, get rejected, and start to roll over. As soon as it starts to roll over, you're going to use the 10-day moving average, which is a price of 147 as your stop loss. You're going to enter into that position and you're going to take profits on the pullback. Just know that if we do reconfirm the 147 price, you want to exit and cut that loss. The last thing you want to do is take a short position off the rejection of the 10-day moving average, let it come down a little bit, go into profits, and then reverse on you and now be stuck sitting holding puts when the price is $148. If you would like to sit back and wait for the bigger move, what you can do is take the next day's trade, which confirms the price over the 10-day moving average. The macro trade to the short side, if this is just a dead cat bounce, is going to be a short position where I will look to take puts below 143. Obviously, price target's going to be this linear regression channel 50, and that price is going to be around $140.82. Again, keep in mind, I do the same process, 10 to 15 contracts. We'll scale out 2 or 3 at a time as I'm in the green and try to clean up everything before it touches this, because again, just like going long, the last thing I want to do is have a bunch of profits on the way down, hold it thinking that it's going to break this level, to have it bounce and then give back all those profits. Always remember to take profits on the way up. Always remember to take profits on the way down. If you can afford to play multiple contracts, make sure you are scaling out, at 15%, 20%, 30%, 40%. It's not every day that you catch those 50, 100% gainers. So just know that over the course of a week, over the course of a month, over the course of a quarter, and the course of the year, if you are constantly can be successful at taking 10, 15, 20%, you will have a net positive P&L at the end of the year. A lot of times we get caught up in trying to make those big home run trades each and every single time. We are looking to trade the stock, not marry the stock. I hope that makes sense. If you guys would like to trade with me and my community, make sure to join the Discord. That link is down in the description box below. I will see you guys all on the next video.